Hello, everyone, and welcome to the Hardcore Finance Show with Shimon and Alex. And back after, wow, it feels like, 4 or 5 months. We've really taken a long hiatus, haven't we?
Yeah, it's been like 2.5 days in crypto world.
It's like dog years, but reverse, or real dog years. 4 months in the crypto world is like, what? A couple of years, it feels like, in the real world, isn't it? There's a lot has changed. Maybe we should just Hi, viewers, first of all. Maybe we should recap what the hell has changed in the last 4 or 5 months. A quick whirlwind of, small things like a global war, authoritarianism in Canada, craziness with COVID. What else has changed since December of 2021?
Yeah, I mean, in December 2021, you would think that the world is a peaceful place. Nobody's confiscating people's bank accounts without court orders. The stock markets keep going higher and higher. And what else? People keep getting good hair and no wrinkles. I don't know.
That's good. It's like we talked about those. Wasn't there a story? I don't know if it's a legend or a story, but the monk, that went into the mountains before in January, February 2020, and they came back in April, and the whole world is like shut down because COVID is hit, and it's like, what the hell happened on my silent retreat?
Yeah, I told you this story. It
You did.
wasn't a monk, it was a regular dude that went to like a 3-month Buddhist retreat in January of 2020. And he comes out in like end of March 2020. And he's like, what's going on? It also reminds me of a stand up comedy guy that said, my buddy just left prison and he was there for like 4 years. And he's like, what? You can walk into a bank with like something covering your face and everybody's cool with it? That's awesome. So yeah, a
Bank
lot has.
the bank robber. A lot has changed, hasn't it? Yeah. So, like, what are the big three? We should talk about Justin Trudeau in Canada. Although all these things have been talked about ad nauseum before audience, let's just recap some
Here's
things that
the
have
three
happened.
things we
Yeah.
think are the most important in the topics that we cover.
Justin Trudeau in Canada, war in Ukraine, the absolute abysmal crash of the stock market and crypto markets and all the other markets, and these, and I mean,
That's
that
it.
we should talk about forever. Debt cycle that it's going to
That's
go into.
three.
Fine, three. All right, you start, Shimon. You go. You go. What are we starting with?
Uh, well, I would start with the markets actually. I think it's very healthy, and I like to take the unpopular opinion. I just have to say, we've been speaking about this offline. It's like people, to make a lot of money, you need to basically have a belief that's different from everybody else and is also correct. So my belief in our belief in the NASDAQ is different than everybody else, and I really think that it's also correct in the sense that okay, great, like now we had a little correction, but nobody's talking about the NASDAQ as a whole. Like I've heard people criticizing specific companies, specific valuations, specific trends, but like I've never heard, even in the last month or so, an argument on why the NASDAQ is not the best place to put your money. So that's what I wanted to ask you, Alex. Like,
Yeah.
given the latest price movements, which are brutal, especially on the NASDAQ, what do you think about, is the NASDAQ still the best place to put your money, or has your opinion changed?
I think there's a lot there. First, time horizon. What time horizon are we talking about? This is very important. If
10
if we're
years,
talking about what?
10 years from now.
No, 10 years from now. It's obvious, right? It has to be the
Not
Nasdaq.
obvious. Some people say, tech is overvalued. It's a bunch of false
Short
promises.
term. Short term.
Well, that's what we're here to discuss.
Yeah. So look, I mean, look, sure, if somebody's thinking about 6 months from now, which I think 10 years from now to me is a very long horizon, it makes things a little bit
5
easier.
years. Does that matter? I mean, I'm
Five
not saying
years?
2 or 3 or 4 years, because
Yeah.
2 or 3 or 4 years for me, it's just noise. Like some politician can make a decision and it affects the world 2 years, but it's not going to affect the world 5 years. You know what I mean? So that's my framework.
Yeah, but we're young, right? And so we can wait. If someone's retiring, 2 years is a big deal. 6 months is a big deal. Like in the very short term, we were wrong about the NASDAQ in the very short term, because had we sold the top, or when we were thinking things were getting frothy, we have podcasts that talked about things are getting frothy in September and October, and November and December. We talked about this. Um, had we sold and moved into more defensibles, yeah, I think the jury's still out, right? Depends on what's going to happen with the market. So just to level set, we've had probably a 40-year bull run of bonds. So people buying bonds, which means the yields are falling. Now it's getting reversed, right? It's hit zero. Now it's coming back up. It depends on how much it comes back up, all the way up, or just trails after a
Just
couple percentage
explain
points.
to our viewers the bonds idea of the difference between the interest on the bonds and the price of the bond and what you mean by
Mhm.
reversal.
Yeah, so
Just
like
in case.
yeah. So for those, there are different bond types, different bond maturities, 3-year treasuries, 5, 10, 30 years, and so on. A lot of people look at a 2 versus a 10, for example, 2-year versus 10-year. And so let's say a bond is paying you a certain coupon, call it 2%, okay, on a bond. If there's a lot of demand for that bond, just like any object, you sell it in the primary market, you issue these bonds, someone buys them originally, and then they resell them. So if there's a lot of demand, the price of the bond moves up. So call it, you get 2% a year. So you can buy a bond for $100. At the end of the year, you get $102. If a lot of people want that bond, it'll go from $100 to $101 to, call it $102 to make it easier, right? So if you buy a bond for $102, that's going to give you $102 at the end of the year. The yield is zero. You're not getting anything. You're not getting any return. If you buy that bond for $100 and you get $102 at the end of the year, the yield is 2%. So the cheaper the bond is, the higher the yield is. The more expensive the bond is, the lower the yield is, right? Because it has a fixed maturity uh, price plus coupon payment. So what happens is when there's a bull run in the bond market, people are buying bonds. In this case, a lot of times it's the government buying their own bonds, essentially the central bank, the Federal Reserve is. Um, you from the Treasury, which we talked about many times. So that's because of COVID. That's a terrible system. But without going too deep there, when there are a lot of people buying bonds, the yield, the is resulting essentially effective interest rate that you get from holding this bond on the secondary market drops essentially to zero. And in fact, because of inflation, we've had negative real rates. So basically, let's say you're getting a 2% on whatever bond you have, and the inflation is 8% per year, you have a negative 6% real return. You're locked into a 2% return, but you're losing 8% due to inflation. And so that's the inverse relationships between bonds and yields.
Yeah. And let me interject here. I just want our listeners to understand there's two reasons for people to hold negative yielding debt. Like you could think, why would someone take their $100 bill that they keep like in their pant pocket and like buy a bond with it if they know that the bond pays 2% and the inflation rate, the last inflation rate is like 6% or 7%. So it's a negative yield. So like you will get less money than investing it in any other thing. There's two main reasons. One reason is basically speculating in the fact on the fact that the government will lower the yields even more. So it can go to zero, it can go to negative yields. And then what happens is what Alex explained, the bond, there's think of the price of the bond and the interest as a seesaw. It goes in the opposite direction. So it's almost like if the price goes up, the yield goes
Mm,
down. If the yield goes up, the price goes down because of what Alex explained. And so, one reason to own a bond is to say, the yields are low now, the yields are negative now, but they will get even more negative in the future. So that's what I'm betting on. And that's many funds that I know are actually betting on that. And then the second reason to own this is basically to say, look, there's no other alternative. Like, where am I going to put the money? Because, like, if inflation is 8%, and the bond pays me 2%, if I just keep my money under the
Mhm.
mattress, I lose 8%. If I put in a bond, I at least get 2%. So those are the two main reasons that most of the institutional people are holding on to bonds.
Yeah, look, I think it's a great ad, and to bring it back in, we have many market moves here, right? So we've had a bull bond market. Again, yields are falling. Now the Federal Reserve is increasing rates, right? And looks like they not looks like they've been behind the ball for a long time, and the market has been screaming. This is why we have such chop in the market. Behind the ball, market is afraid they're going to really increase interest rates, jack them up. It's not about the amount. I mean, it is, but really it's about the velocity, right? So you go by 25 basis points, so 0.25%, and you go 0.5, 50 bips, 0.75, right? 75 bips. These are massive interest rate moves. Our thesis has always been that, hey, the Fed can go higher than 3 because we're going to be paying too much in debt service. We're going to be paying essentially $1 trillion in debt service, which is a third of our budget, and it would get up to about 6% of GDP potentially, which is an insane amount for a stable global leader like us to pay in debt service per year. You can imagine paying more in debt service than you do in Social Security payments. So you pay more to just as interest, not to pay off the debt, just interest on the debt, more than you're helping the needy in this country, which is a shame, right? It's terrible. So we don't believe that the Fed can actually jack up the rates. How the one thing we should talk about, Shimon, actually is there a scenario like the 80s where Walker or 70s and 80s where Walker had to really jack it up to 17-20%, where it's an extreme, emergency. It's like, hey, for half a year, we will take this hit and then bring the rates back down for a year. But inflation is so bad and so sticky that we just need to control it because it's a virus, right? Once inflation takes hold, and one more thing I'll say and I'll pause because there's a lot to talk about. The real problem with inflation is not the current CPI numbers. The real problem with inflation is consumers' expectation of the inflation that's coming 2, 3 years from now. Because once once it gets in your head that there's high inflation, that's the virus that doesn't leave. That's when you start hoarding things, right? That's when you start buying things and not spending or quickly spending your money, right? Or moving out of speculative any kind of long-term assets. You go into cash assets. Like this is where the inflation problem really rears its head, and it's really hard to move human psychology. As we see now, thankfully, the U.S. expectation of inflation in 2 years is actually coming back down to 3% or so. It's only the short-term inflation that people are seeing. Even with all this data yelling, "Holy cow, we have such crazy inflation," consumer sentiment doesn't change. The problem is that once it changes to inflation, it's going to be very hard to change it back, right?
Yeah, I mean, look, I think the playbook is pretty much broken because there's this idea of the Laffer curve. And there were two main ideas about tackling inflation that got Paul Volcker to intervene in the 80s. And this, I took a course in this. One was the Laffer curve, which basically says, look, there's the correlation between the interest rate and unemployment. So basically, the higher the interest rate is, the higher the unemployment rate is. And the lower the interest rate is, the lower the unemployment rate is. The idea there is basically that, if you have a high interest rate that the central bank sets, then people will want to hoard money instead of investing in things. And so they would hoard the money to just get the interest rate that the bank offers
Hmm.
instead of creating big projects that employ lots of people. And so what happened is if you have a very high inflation, like when Volcker raised the interest rate to like double digits, there was a crazy unemployment rate. And that was the price to pay, right? So like the idea was inflation is high, we gotta fix it. The price of that is unemployment. But now I would argue that that's not the case anymore for
Why not?
two main reasons. One reason is that back then you had a bipolar world. You had the USSR and you had the like Western economy. And so you always had an alternative, right? So like if the Western economy, let's say the yields were low, the USSR could offer higher yields, and so money would flow into the USSR. And when I say money, it's like gold, silver, like commodities, whatever, has monetary value. But now, since COVID, I have documented like data that shows that all the central banks around the globe are coordinating their actions. So when the US cuts interest rates, everybody cuts interest rates. And it's almost like a game theory, right? It's not like a matter of like every central bank thinking like, where on the Laffer curve do I want to be? It's more like, we spoke about this, the cleanest dirty shirt. So it's like, if the US says like our interest rate is like 0.5%, everybody else can put their interest rate at 0.4% or 0.6%, but it's around there. So that's one big thing. And then the other big thing is that the Laffer curve really has scarcity as its basis. So the idea is that you cannot manufacture more stuff just because you want to. And I think now with technology and with Elon Musk and with robotics and all of these things and AI, the Laffer curve is kind of breaking. So, for example, many people, and that's why I don't like short term investing and I'm not good at short term investing. And when you talk about like the next 6 months, I have no idea what's going to happen in the next 6 months. But I can tell you that investing in commodities is very bad over the next 10 years because, like, if the price of commodities gets up, and it doesn't matter what commodities, is it wheat? Now with Ukraine and Russia, people are talking about wheat. 25% of the world's wheat is grown like in Ukraine and Russia and stuff. And so they're having disruptions. So the price of like wheat goes up. So it's like not only bread, but also beef and lots of things that are like upstream from wheat. But I'm saying, wait a second, wheat is a weed. Like you can literally grow it within 3 months, you have a crop. So it's like short term, yes, the price of food will be higher, but like a year from now, I'm willing to bet you the price of food a year from now is not going to be higher than today because food is something that we know how to produce. Now there's other things like oil, which maybe is more than a year, but in any case, commodities, in my opinion, are not something that is limited. And that's what happened in the 70s with the stagflation. It was just like all the oil producers, which were Arab countries, because of Israel's war with the Arab countries, they were like, we're not going to sell you oil. So the price of oil went up. So there's inflation because oil is a component to like everything else. And then also, there was unemployment and stuff. So it was really bad. I don't think we're going to get that.
We're not going to get there.
Yeah.
There's a couple of things. We're not going to get there. No, we were much more dependent on oil in the 70s than we are now. That's another thing. I mean, and now with Russia, Ukraine, we're actively seeking to get off of all oil or most oil, or at least Russian oil. There's one thing you said about the central banks. I do want to say there's one outlier to your theory about central banks act like or follow the Federal Reserve, and that's our dear friend, the Bank of Japan, which I think their whole thing is modern monetary theory. They're always keeping interest rates low. And by the way, as a quick aside, like thank God for the Bank of Japan, because if the Bank of Japan comes out with all the financial models and the whole market is pricing in the fact that the Bank of Japan will essentially keep the money printers going burr. If the Bank of Japan actually says, you know what, for the first time in 20 or 30 years or whatever it is, says, hey, we're going to increase rates, oh my dear God, we are going to have a market like crash, unlike one we haven't seen before, by the way, because there are substantial central bank and always keep interest rates low. So this is one thing that very few people talk about, very few people look at, the effect of the Bank of Japan, because it's kind of a foregone conclusion. You're
But
smiling.
Alex, one problem with your theory.
What is that?
I just Googled something.
Yeah,
I Googled Japan's debt to GDP.
yeah,
It's 252%.
yeah. They're still going. They're going strong.
They cannot increase interest rates even if they wanted to. You know what I
Yeah,
mean?
yeah,
That would mean a default on their debt.
yeah. Exactly. It's crazy.
So
So
it's
they're
almost
just
not their decision because they already have this debt. It's like, yeah, decisions were made since World War II, and like now you just have to face the consequences. And that's the thing. That's what I want our listeners to think about, which is like, we are headed into a really bad macroeconomic situation because of decisions that have been made over the last 70 years. And I almost, the more I think about it, I've been thinking deeply about this since 1989 when the USSR collapsed. Like the macro landscape is worse because, like, with the USSR, at least it was an alternative. And I hate the USSR. I'm not saying it's a good thing, but at least it was an alternative that the West had to, like, moderate based on that alternative. Now
Interesting.
there's no alternative. Literally everybody's doing the same thing. Russia is attacking Ukraine and Germany's still buying Russia's commodities. Like, you know what I mean? It's like, what else do you need to know to understand that the whole world is acting as one?
I mean, look, it could be a good thing that everyone's tied in, but in this case, well, Germany actually now is not going to oppose as of today, oppose the oil embargo finally. But look, I mean, maybe it's a multipolar world where it's not really clear that they're so distinct that they're tied together. China's vying for power, Russia's vying for power, India is vying for power, right? So there's that. I don't know if it's a sphere of influence because China likes Russia as much as they only as far as they need to like Russia. Otherwise, they hate Russia. India likes Russia because the U.S. backs Pakistan, and that's why they get Russian weapons. Russia thinks they are the Soviet Union, which were also won World War II because of the U.S. support, but they're not the Soviet Union. It's just, there's a lot of there are a lot of people who think they're something much bigger than they are. And if anything, actually, the winner is the kind of the U.S. and the West, who were looked upon as weak. And now, because of this war, it's like, okay, well, NATO is forgotten this foregone conclusion. Then the Russian army embarrassed themselves greatly. And now China's probably like, I don't know, maybe I should think twice about going to Taiwan because things aren't working out as easy as I thought. But I digress. I went down a whole different route. It's an interesting perspective to think about that there was a solid alternative you can go to. Yeah, I don't know. Maybe that's it. But regardless, the decisions of the last 70 years, especially kind of post 1970, are really coming to roost, right? Like the chickens are coming home to roost, so to speak. And so, what do we do in this environment, right? That's the main question. Where do you put your money?
Yeah, so I mean, we definitely, since we last spoke, our portfolios have gone down significantly, both in Bitcoin and in the Nasdaq and in the S&P. The only thing is, like, I don't think I should adjust my portfolio based on short-term things, and I don't see the biggest criticism that I've heard is that we're going to crash, commodities are going to go up, and crypto is going to go to zero because crypto is just like, magic internet money. And in my like answer to these, and I would love to hear
Literally, it's
your
magic
answer.
internet money. There's a crypto
Yeah,
called
so
MIM, magic internet money.
yeah, it's true. But my response to this, and I really want to hear your response to this, Alex, is my response to this is like, one, commodities have never been a good investment. Never, never, never,
Is
never.
that
Over
true?
the long term, yes, over the long term of humanity, commodities have never been a good investment because humanity always comes up with better ways to manufacture something, with cheaper ways to manufacture something or cheaper ways to look for it or whatever. So then gold was the only outlier to this until Bitcoin was invented. And Bitcoin, I would assume, is gold's uh downfall in the sense that, yeah, it's a better way to manufacture gold, which means you don't have to dig for it, you don't have to pollute the environment and create holes and support dictators in places where there's gold. Instead, you just have like algorithms, with the difficulty adjustment. So that's one. I don't believe in commodities. Now, many people that I know have made a lot of money in commodities over the last 6 months. So, again, over the short term, I'm probably not the best person to ask for advice, but over the long term, I can guarantee that the price of oil 100 years from now will be lower than the price of oil today. I can guarantee that, just
In
because,
real terms.
in real terms, yeah, because humanity will figure out how to extract oil in a more efficient way. So that's one. And then the other question was, what was the other question about the
Well,
the
what do you do
alternative?
with your money? Right, if not commodities, what do you put your money? I think that's kind of, to me, that's the main, that's
I
really
mean,
the crux of it.
yeah, I haven't changed anything about my portfolio, but that's because I don't need it in order to pay for my day-to-day expenses because I have a job. But yeah, like my portfolio is like 40% NASDAQ, 20% S&P 500, and like 40% Bitcoin. We've spoken in previous episodes about why that's the thesis. I think the main thing I want to tell our listeners today is that the thesis hasn't changed. It really hasn't, because like if you think of tech companies, I don't know, I'm listening to Elon Musk talking about like leveraging his self-driving algorithms that have learned based on like tens of thousands of like cars with so many situations, and then building robots that can like fold your laundry based on those algorithms. And it sounds good to me. Now, I don't want to invest in Tesla specifically because I don't know if he's the best person, but I think someone will come up with a robot that can fold your laundry. And then, like, what's the implications of that? It's like massive implications, massive societal implications, massive economical implications.
Yeah.
So, like, I still am very bullish on the NASDAQ as an index. Now, look, people told me there's so many companies on the NASDAQ that lost 80%, 90% over the last couple of weeks. But that's what's nice about holding an index, that you don't have to choose specific companies. But what do you?
Yeah. Well, I definitely don't choose any specific companies ever. Definitely only hold indexes. Uh, it's been harder for me, but I was never in the high flyers like like I mean, there's some high flyers that came up there. Uh, and I remember I was asked actually about like the Peloton and Beachbody, and I was like, look, it was the height of the market, and my response was, I don't know how defensible these positions are, like Peloton, great, hot company. How defensible is it? You're on a bike and you're looking at workouts, right? Anybody can create a bike and look at workouts until they show that there's data supremacy, like Elon. That's why Tesla was also very low for a long time until it took off, right? Because you have to see that data supremacy, that the fact that you're ahead exponentially when others aren't.
Well,
So
the
anyway,
thing is,
yeah.
Elon can let your car drive in an urban center. What can Peloton do with its data
No,
supremacy?
but you can argue, yeah, they don't have to have the same value as Tesla, but you can argue, hey, Peloton understands the way, let's say, you cycle in your body mass index and exactly the way you eat. So because of all the people, and let's say it has sensors, I don't know if this is the case. I don't really own a Peloton, but you can argue that a gym hardware equipment, that's smart hardware equipment, can collect enough data in order to better tailor exercises towards your exact body type. And then it's so much ahead of others, right? It's all about finding and molding data into creating value. So yeah, so maybe it's less than logistics, but you can say health, right? If everyone, if this is the thing that cures everyone's health, you better believe that everyone's going to go on and use it, right? So that's the bull case for these things, right? The bear
Yeah,
case
you,
is
you raised a really good point, which is like, even if you don't think of Peloton as a specific company, somebody is going to figure out how to use your health data, whether it's your DNA sequencing, whether it's your like blood tests, or whether it's like your the way you move with a Fitbit, or whether it's anything, and to give you recommendations. That's like extremely valuable. I would claim that that's the next Google. I just don't know who
yeah,
that company is.
yeah. So Theranos,
Oh
definitely Theranos. For the record, not Theranos.
no.
Don't go to Theranos. Um, yeah. So look, I mean, I think now it's you have to kind of pick the stocks, uh, and for me, it's been harder. Or even though I wasn't in these high flyers, like what's happening in the market now, especially in tech, is we've been deeply oversold in many of these companies. Here's an example:
Also,
Amazon, oversold.
what do you mean by deeply oversold?
Oversold. Ah, my dear Shimon, this is a TA term. Oversold is when you're seeing like there's in the indices, right? Like about the strength index, RSI, and so on. You can look when a stock is overbought or oversold, like frothy or not. And essentially is could typically see like the velocity and what and who's selling and how. Like you have the same thing in crypto, where the NASDAQ and these tech stocks are way, way oversold to almost historical levels, but they're still getting sold. You can stay in oversold category. Like look at crypto. Bitcoin has been oversold relative to its fair value by many models for about a year in 2018, mid 2018 to mid 2019. Then it went up on a little run, then broke, and and then it was okay. But there was a deep period there, COVID crash, right? Look at the COVID crash, the V-shaped recovery. For a week there, it was deeply oversold, right? Just based on where it should be at that point. So tech is deeply oversold, but it's still falling. It's like a falling knife. It doesn't stop. And why? There's bot trading. Right now, the market is very technical. There's no, like, you're not sitting there and you're not saying short term, long term, yes. You're not sitting there and saying, hey, I believe in this company. If you're thinking, short term, I'm saying within 6 to 9 months. I believe in this company, great management, great product. That's all good. And then the company keeps on getting sold and sold and sold. It's like, why? And Amazon is a great example. They missed earnings. They said this, it's a little harder with the economy. They were sold down 15% in one day. Come on, that's not like this is as it's kind of like in 2008 when the banks were crushed, and like JP Morgan was going for $1, Goldman was going for $1 on the share price, something along those lines. Amazon shouldn't go down by 15% just because you slightly miss, earnings, and you say, hey, the next 6 months are going to be fairly tough. It's not
You just
worth
want to frame
15%
this.
less.
Okay, I just want to frame this for our listeners. So, Amazon stock was $3,500 in November 12th. Now it's $2,400. So it, it,
30%.
it lost $1,000. But if you just say in January 2017, it was $800. So you would have still made 3x on your like money if you had bought it in 2017.
I held it.
So let's just put things in perspective.
Yeah,
Like that's
exactly.
with a lot of tech, which is like it went parabolic during COVID because like COVID was like it's not only a use case for tech, it's like a forced use case for tech. Like people were ordering food deliveries because they didn't want exposure to COVID. People were working from home, so they need Peloton and all of these things. So it was like almost like forcing people to use tech. And now it's unwinding a little bit. But that the question is, does that still change your thesis about tech
It
that you
does
had in
not.
2017?
Does not. It absolutely does not. It accelerates because these things are going to be sticky. People are going to say, you know what? Here's a great example of this, right? And it's very hard to quantify fully. I mean, we can quantify it from a high level. But how many people do you know? And I challenge the audience to think about this. How many people does everyone out there know out of your social group that says, "Hey, now that I work for 2 years remotely and I've proven that I can do this, I can't wait to go back to the office every single day, and that's going to be the perpetual life where I'm in the office every single day." Versus, I'll go in some days because I want to see people. It's hard to work from home. Some days I'll just work from home because of kids or other things, and I'll be just as fine. So I'll have probably a hybrid schedule going forward. I think I think probably 90, 95, 100% of our friends or people that we know are like, yeah, the future is going to be a hybrid work environment where we're not in the office all the time and it's absolutely okay working from home. It's acceptable, right? Um, and I think, there may be some banks. I know Citibank is all coming to the office, but that's also going to wind down because people are going to push back against this. Now it's going to become a talent issue, a competitiveness issue. People are going to say, I worked absolutely fine. In fact, many studies say people were more productive and worked more hours when they were working from home. And Zoom and all these things helped. So they're not going anywhere. They're not going anywhere. This is why Microsoft's quarter killed it and they put their guidance higher. Microsoft is to me, and I work there and I'm not biased, but as a company, Microsoft is like a tech ETF. It has enterprise, it has consumer, it has hardware, it
It
has
doesn't really
legacy
have consumer,
servers. What?
but I'm saying it doesn't really have consumer, but that's another
It
story.
does? It
It has
absolutely
enough
does.
of the rest.
No, but it absolutely does. One, I'm talking
Like
about just
what?
business exposure. All their hardware, the Microsoft Surface, Office 365, there's enterprise, there's student, there's home, right? Minecraft is a huge thing for kids. I mean, it's bringing in a lot of revenue from a gaming perspective. Xbox and Xbox gaming and
Oh,
all that.
Xbox. From everything you said, Xbox is maybe the only real consumer play.
No, look at Office 365 sales. It's the whole Microsoft is a cloud story. Anyway, the point is
Anyway,
there's consumer exposure. So
yeah,
like nobody's not using, PowerPoint or Excel less, right? No one's not calling less. No one, these things are staying, right? These things are staying. So
yeah,
yeah,
that's
I
true.
agree with you. Go ahead.
Cool. So what would you say is the good place to put your money over the next, like,
Yeah, look, I
let's
mean,
say, but 6 months is really hard. As far as I'm concerned, 6 months is a noise. Like, you can have a nuclear tactical weapon deployed by Putin. Okay, that would affect stuff in 6 months, but like 2, 3 years from now, it's not gonna affect the economy. So a year, 2 years from now, if I had cash today that I just received, where would you suggest I put it in?
so it's, if if I was to do this fresh, right? Our perspective has always been NASDAQ and tech. Right now, what I would do is I would split it up, and I don't know exact percentages, but I definitely put some in Bitcoin, probably the biggest, right? Maybe 60%. Um, I probably be I'd look, not today, but I would look to get into tech at some point next 2 or 3 months. I would wait. Actually, in all this, I wouldn't go in just today. I would kind of hold cash for the next 2 or 3 months. I think there's gonna be a capitulation of some sort, and that's when you go in. But Bitcoin, if it goes down to 30 or 25 or like 20, you should be jumping in, jumping in. And it could go down to 20. Um, in the Nasdaq, and then in real estate, and it either yourself or some sort of cash, or in companies that are okay paying high dividends, right? Um, or have high free cash flow. Because these companies give you back dividends, you take dividends out. It's not just stock appreciation. Microsoft, another high dividend company. So you get stock appreciation, you get dividend, which you can reinvest. You're basically optimizing for cash flow because you're thinking if there's a capitulation event, I want to have cash on the side that I can deploy, right? Um, and I think you and I pretty much maxed out in terms of what we're deployed. We are, we're not in. At least I'm not in the most optimal position to take advantage of this current market. But that's what I would do. What would you do?
I mean, I would basically do tech. I would still do tech. I wouldn't do commodities, even though people think commodities are doing fantastic over the last couple of months. But I just think I want to bet. Look, the older I get, I'm almost 40. The older I get, the more I understand that I want to bet on human flourishing. And this aligns my money. There's this whole ESG narrative, which I think is like
Yeah.
complete bullshit. And I think it's actually capital destructive instead of capital accretive. But my point is, I do want humanity to flourish. And high commodity prices are not human flourishing. I mean, the poor people especially, they spend most of their money on commodities, and so I wouldn't bet on anything that's linked to commodities, and I wouldn't bet on real estate because, to your point, rates are going up. I don't think what I think will happen, by the way, and our users, our listeners can timestamp this because one of the most things that makes me the most proud about this podcast is that we actually predicted things. And if people would listen to us, they did really well for themselves. So please timestamp this. I think real estate prices are going to kind of flatten out. This doesn't make me happy because I just bought a house, but I think that the interest on real estate will keep going higher, which the mortgage interest rate, but I think the inflation rate will be higher than that. So I think in essence, the price of your home will increase more than the increase in the interest rate that you're paying for your mortgage. So still, it makes a lot of sense to own a home, but I don't think that it's going to be as lucrative as until now, because like interest rates are increasing, and that means that people can afford lower prices of
Hmm.
homes at a standard salary, at a set salary. So that's what I would do. I would invest in tech, I would invest in Bitcoin, and I would invest maybe in real estate only if you have to, only if you live there. I wouldn't invest in real estate as an investment, like to rent it out, because there I think the market is pretty efficient. So I think it's going to be harder and harder to get like a premium on like buying a house and renting it out. Basically, what will happen is the rent will will stay the same, the value of the price will go up. So the ratio of rent to value will kind of go not in the favor of the homeowner. But that's what I think. No commodities, NASDAQ. And again, the reason why I love the NASDAQ is because like I want to invest in cool things that humans are inventing. And like, you know, there's so many things. Like you think of robots, you think of medicine, genetic engineering, all of that stuff. Like COVID, I think it's a huge boost, first of all, to people wanting to be scientists, and the young generation wanting to be like going to STEM to solve future pandemics. And also like it just increased the understanding that we have of the genome and stuff. And like maybe we can have a vaccine for cancer. Like think of the GDP effect on that. You know what I mean? So it's like I really am bullish on humanity. And also the rising oil prices now, and the fact that the West wants to decouple from the East. And I think that's a very important thing, which is like um, Putin is basically not very rational. He's like a weird guy that has a lot of power. We haven't seen this since 1991. So now the West will want to like have its own power in terms of energy. And so that would be very good, I think, for nuclear energy, for just like lowering the cost of energy. And if the cost of energy goes down, you can just create more things for a given budget. So I think the quality of life will keep going up and up and up, and also like we'll want to invest. I'm kind of happy that there's this healthy competition now between the West and the non-West, call it, because like it will require people to kind of like innovate more. What do you
Yeah.
think?
Well, no, I mean, I think it sounds like the the thing we differ on is real estate. Is that right?
I don't know. What are your position? You tell me.
No, I said Bitcoin, real estate, and Nasdaq. But
Yeah.
I think rent's gonna go up. I think rent's creeping up a lot because of inflation, and then you can go into commercial real estate, for example, or others, with just new rent-seeking areas. But it's okay. I mean, it's good that we differ a little bit. I just, there's a premium to cash flow, having something generate immediate cash flow so that you can redeploy it as needed.
But do
Um,
you think that real estate is not a good investment? Because I
I think
said
it
it is
is.
a good. No, I also said it's a good investment. So you don't have a.
Well, you said you wouldn't go in because you think it's not as good as
No, no. I would say real estate. I would definitely go in. Did I say that I wouldn't
you
go in?
did.
Well, no. I mean, I just bought a house, so I clearly think that real estate is a good investment. I just
No, but
like
today, the one point today, if your exercise was, if you got $100 today, what would you go? When you said real estate, well, you know, the the
I mean,
home
the
values are
rates
gonna
of
slow down.
mortgages are going up. So, yeah, I just don't know if it's like basically real estate, you can always build more. Yeah, that's the thing. Okay, so my two things for why not to invest in real estate
Yeah,
long
but
term
hold
is
on, but but are you changing your mind? Are you going into real estate or not into real estate? Is real estate good or bad?
no, I'm thinking, well, the real estate that I bought for myself is a specific location that I think it's going to
No, but
hold
I know
value.
overall, I know but you're very, if you're giving someone advice, would you say, you said Bitcoin, you said Nasdaq, where else would you invest? Would you invest in
Yeah,
real
I
estate?
wouldn't invest in real estate because, like, again, the inflation now is it's getting high, so I think that they can manipulate the mortgage rates to
Yeah.
like increase the mortgage rates a little bit. and so people will be able to buy less real estate for
Right.
this. Yeah,
But they,
that's
so you said, so you would not. And I'm saying I would. So we
oh,
differ in real estate.
you say that you would. Okay,
Yes.
why would you?
I agree with all your premises, but it's about cash flow. If you can generate, if you can invest, not like overspend for a home you want to live in, necessarily, but just like right now, invest in, because the home you want to live in, I agree with you, right? This is the time if you're trying to get into a home today in May 1st, 2022, may want to wait to see what happens with the rates, right? The market could change. But if you want to deploy money today and you want to deploy, yeah, I would go into some sort of, either you can get a property that you can rent out. I think rent is going to be pretty powerful, right? Plus the tax advantages to real estate. It's just about generating cash flow. Or I would do like Bitcoin, NASDAQ, 80%, and the 20% I would short term play it, for example. Maybe go into some industrials, not commodities. Industrials they can pass on price for the next year and a half, 2 years, right? It's a very kind of quick. It's like my Moderna trade, which I've learned the hard way. I bought Moderna very early, and then it went up to 450, and I was thinking, man, it's just getting really hot. But I do believe in Moderna long term. I believe in the pipeline. I believe in a lot of things that they did, and then it fell. And I was thinking, like, okay, I- like I probably it fell a little too much. I probably should hold. That was like to 300, and now it's at 150. Okay, so I would have gone out. So the point is to play with manufacturers be about a year and a half play, and let's say you double your money, that 20%, you just get out, take it off the table, which is what I am bad at, but I'm learning to do a better job of, and then moving in. But that's not a long-term investment thesis. It's a very short-term investment thesis to just kind of play the momentum in the market. That's what I would
Yeah, and I would say crypto is very important because it's the only thing. The more, and we should talk about the Canadian truckers, but basically the idea is, I just listened to a podcast today with the Canadian truckers. What's interesting is that when the government said we can just seize a bank account without any court order, in the next 7 days they lost more than 1.5 trillion dollars.
do. Wait, is that true?
I mean, that's what I heard on the podcast. Of It was the podcast of Alex Svetsky with the guy who was the main trucker guy, like the organizer or whatever. It's called the Wake Up Podcast, so you can listen to the latest episode. They said they they did the law. More than 1.5 trillion dollars left the country. There were queues in banks, like physical branches of like elderly people that were withdrawing their money because they were remembering the Great Depression, where somehow their banks are frozen or something. So, and then they reversed the decision within less than 7 days. The Canadian government, the emergency law that allowed them to seize bank accounts, they reversed it within less than 7 days. So I think it's very powerful, this idea of like, okay, Bitcoin is really the only thing you can put your money in, and it just holds it in a way that cannot be touched by anyone. Because if you think about it, real estate, stocks, anything you do with your money, commodities, anything, the government can just change the rules, and then that's it. They can say, oh, commodities, now there's a 10% commodity tax. That's it. You can't do anything about it. Bitcoin's the only thing where you can put your money in it, and then you can just go to El Salvador, or now there's a second country. We didn't talk about that, but it's the Central African Republic. Second country, very small countries, right? It's fine. This is, I think it will be written in history as one of these revolutions where the small countries adopted it ahead of the big countries. It's the first time. It's never happened in humanity. Always in humanity, revolutions are led by the big empires. But we have two countries now where it's legal tender, Bitcoin. So yeah, you can go to El Salvador, buy a house. Nobody needs to know about it. Nobody, you don't pay any taxes on it, and that's it. So I think
So,
it's thing.
yeah, we need to start wrapping. But you said a couple things about the Canadian truckers. Look, let's Fact check that 1.5 trillion. I'm trying to look it up really quickly. I don't see anything, but man, I'm sure it's right.
I'm
Or
telling you
I think,
no, I'm not sure it's right. I'm telling you the podcast where I heard it. So
well, I
and
have to
he
look.
was the head of the trucker convoy, so he probably has a point of view. But that's what he
A
said. He said
biased, a
the
biased
fact
trucker
is,
data.
the fact is that they reversed it within less than a week. That's a fact.
Yeah. So that that decision is was quite shocking and quite a proving a bull case for crypto. For those who don't know, basically Trudeau expanded his powers under the Terrorism Act in order to freeze people's bank accounts, in this case the truckers, or anyone that donated more than $25 to the truckers, to freeze their bank accounts without a court order, which is just fundamentally authoritarian. Um, yeah, and so this is it's a great case for crypto. So we so so yeah, it's 1.5 trillion or not, but there were definitely queues. I remember people lining up to go to the banks. Then the Russia-Ukraine war, where people are donating crypto overnight to get them in Ukraine, where every day, half a day, every hour matters, right? And you can't wait the weekend. Another proof case point for crypto. The fact that the Russian oligarchs are absolutely not avoiding sanctions with crypto, I think, is going to be a bull case for crypto. It literally is like this whole thing. When Elizabeth Warren goes up and says, "Oh, they're avoiding sanctions," now everyone, the ECB, the Federal Reserve, everyone is saying, the Treasury in the US, that actually there's zero evidence of people avoiding sanctions using crypto. So it's like this whole boogeyman thing that was out there in actuality. This is the biggest geopolitical crisis of the last, since World War II. This is
Yeah,
bigger than the Cuban Missile Crisis,
of course,
right?
because the
And
missile crisis, nothing happened.
yeah,
Here,
it
the
was a
national war.
war. Yeah.
Yeah,
So between and many, essentially, it's a proxy war. Even though what the U.S. says it's not, it is a proxy war between the U.S. and Russia, and we're this close from an actual shootout war between U.S. and Russia, right? So it's like it's Vietnam, but on a nuclear scale, right? So it's and in the worst crisis, the people directly affected by the crisis, our direct enemy, is not using crypto to avoid sanctions. That you would think they would use the easiest means possible. If they're not using crypto, there is no other proof point that crypto is not used by criminals. It's like it's just not. And so, yeah, I think in the long run, these things are going to look back. This will be a major catalyst, and people understand. People look back and say, "Holy shit!" Like the crypto geeks were right. The crypto punks were right all along, and all these talking points, ESG, right? When now that China's banned Bitcoin miners and Texas is going to become the biggest renewable miner, location in the world, ESG argument is going to go away. Criminal argument is going to go away because these are actual proof points. Facts are stubborn things. It's very hard to argue with facts of what's actually happening versus talking points. So yeah, it's kind of interesting to see. This is definitely the a big battle. You and I always talked about when the battle is going to come. We thought at 100,000 or maybe 250,000, something like that. But no, it's coming here. But fine. And I think once we clear this bullshit, like it might take a year or two. But once we clear this bullshit, then it's just like this makes me very bullish as we're talking about it.
yeah. I mean, I think that's a fantastic point, which is like it couldn't be better for Bitcoin, right? Because like if the Russian people who are sanctioned don't automatically buy Bitcoin, it basically means Bitcoin is not a tool to avoid what the majority wants to do. It's not a tool to avoid sanctions. It's a tool to avoid what a minority wants to inflict on a majority. And I think that's a huge thing. I think it's going to be like one of those moments where, um, 5 years from now, we're going to look at this thing and we're going to say, yeah, like Bitcoin is neutral money. So it's not like, if the government wants to ban it, it doesn't care. But also, if a small percentage of people want to like use it to go around the government, it also doesn't care. It's just like a
Yeah,
network. Because like the government controls the on ramps and off ramps, right? And like you can have a global government that says, okay, what are you going to do with your Bitcoin? You can't buy a yacht. Let's say you're like a Russian war criminal that like killed, a bunch of people in this war, and you're on the sanctions list, you're on the OFAC list, and I'm sure that other governments have the same list. What are you going to do with your Bitcoin? You can't do anything with it. But on the other hand, if you have a legitimate, just like a normal person, a taxpayer, you want to invest in Bitcoin to avoid inflation, what are they going to say to you to stop you, from using your thing? So I think that's extremely bullish. That is the first time that it actually separates. Before it was Ross Ulbricht and the Silk Road and all of these things, but now it's a country, and we see that they're not using Bitcoin. I think that's very bullish. But
Yeah.
I think we have to wrap. We've been going on for a very long time.
It's
Maybe
a
because
welcome back episode.
exactly we haven't spoken for a very long time. So, what are your last words to our listeners?
Well, we're gonna do this more often, and as always, buy freaking Bitcoin.
Yep, I couldn't agree more. It was really nice connecting again. And yeah, guys, if you have any money, guys, gals, folks, if you have any money that you don't need, NASDAQ now is getting slashed. There's very little certainty about where the markets are going, no matter what people tell you. We don't know what the interest rates will be. We don't know what the commodity prices will be. But there's one thing is there's never going to be more than 21 million Bitcoin. So that's one thing you can put your mind
All right, Shimon, until next week.
to. Alrighty, thank you, Alex. Talk to you next time.
Bye.